Personal finance practice problem using Excel. College savings calculation. Prepare to get financially fit by practicing personal finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're down here in the practice tab as opposed to the example tab. The example tab in essence being an answer key. Information on the left-hand side, going to populate that into the blue area on the right-hand side, looking at a college tuition saving type of scenario. So there's a couple types of things that we would commonly need to take into consideration when thinking about college savings. One is we want to think about how much money we're going to need when the college basically starts. And then two, we got to think about the idea that the college is kind of like an annuity, you would think, in that we can estimate how much it's going to be costing for the time period that we will be there, which would be like 4 years that we'd basically be planning for. So we have two things that are kind of involved here. We got once the college years start, we have a annuity type of situation where we would assume set cost that it's going to be costing for, let's say, a 4-year time period. And then two, once we know that annuity amount, we can think about how much we would need to be investing at this point in time in order to save enough to get to that annuity amount, to get to the college years point in time. And then, of course, we could take into consideration student financing and other kind of things that would go into play at that point. So at this time, we're trying to figure out how much would basically college cost, at the point in time that college would start, using our annuity type of calculation. And we're going to be assuming that the costs for college are going to be the $25,000 per year for 4 years with a rate of return at the 6%. So in other words, if we had a series of annuity payments then for 4 years that are going to cost us the $25,000, how much would we have to invest in order to cover that? And of course, the first calculation, you'd say, well, we would need the $25,000 times 4, which would be the $100,000. And I'm going to make that blue here, that $100,000 total. But if we have money in the savings account during the annuity and it's getting the 6% increase, then we don't need the full $100,000 at the starting point. So first we want to think about how much we would need kind of at that starting point. The next step, and that's what we'll work on here, the next step would then think about how are we going to get to that starting point number in terms of our savings as of today and or any other financing that could be taking place. Okay, so we'll do, now this is a similar kind of thing with this annuity type of calculation, which seems a little bit one of the more difficult ones to visualize in your mind, because you're saying this is an annuity kind of thing because we're going to assume it's a $25,000 for 4 years even payment, but it's something that we're planning to happen like in the future. So you might say that it should be a future value annuity, might be your first guess, but it's actually a present value of an annuity because we're trying to figure out the annuity payments and then bring them back to the amount that they would be at the start of the annuity. So to prove that, then we'll do a present value type of annuity calculation, and then we'll prove it with a running balance type of calculation, and then we'll do the other methods of calculating a present value of an annuity. So let's start this out. We'll do this a little bit quicker because we've seen some similar problems. The difference here is kind of the scenarios that you want to keep in mind that you can use these different calculations for and be able to understand when you look at different things that you're planning on that are going to be in the future and need to take into consideration time value of money, that you can figure out which tools to be using. So we're going to say this is going to be equal to the present value, shift 9. We're going to pick up the rate, which I'm going to not type in there at 0.06, but take that from the table at the 6%, comma. We're now at the number of periods, which is going to be 4. So we're going to say 4, bringing that from the table here, and then comma, the payment. The payment's going to be the $25,000 for each of those years, and we are using a payment because we're talking about the annuity point in time once in college. We don't have any future value, so I'm just going to leave it at that and enter. Let's go ahead and make that a positive number by double-clicking on it, and then I'm going to put a negative. We could put it in front of the payment. I like putting it in front of the present value, so I'm going to put a negative here, flipping the sign to the 86, 67, 627, 64. So if at the start of college we plan on taking out $25,000 each year and we're generating 6%, we should not need, hopefully, the $100,000, but the 86, 627, given the fact that the amount that's in the savings account hopefully will be making around that 6% of of interest or increase or whatever value that we have, whether it be a savings account where it would be interest or it would be stocks or something like that. Let's go ahead and hide some cells and kind of prove that by doing a running balance calculation. We're going to put our cursor on column D, drag over to column F, let go, right-click on the selected area and hide them. And then we'll do our running balance calculation. I'm going to put our periods here by saying 0, 1, and so on. Selecting those two cells, putting our cursor on the autofill handle and dragging that on down to 4 periods. Going to go up top to the Home tab, the Alignment group, and center that. Now, our starting point, I'm going to recalculate just to practice this again. This is going to be our starting point, and then we're going to imagine this annuity playing out, and the end result should be 0 at the end of this process. So let's test that out and see if that is indeed the case. Negative, present value, shift 9. We're going to pick up the rate over here at the 6%. Same calculation, so I'm going to do it a bit quicker here, comma. Number of periods is going to be the 4 periods, and then comma, and the payment is going to be the $25,000. That's it, and enter. There's our starting point at the 86,628. So if we had that at the beginning of college, and then we're saying that this is going to be, I'm just going to call it the increase instead of interest because it might not be a savings account. We might have it in some other format. But whatever format it is, we're going to assume a 6% increase. Now, I'm going to try to do this a little bit quicker. I'm going to plan as we go to copy it down. And so any absolute references, I'm going to do that on as we go here. So this is going to be equal to the 86,628 times, and then the 6%. Anytime I pick up something outside the table, I'm going to think and say, am I going to need to make that an absolute reference to copy it down? Do I want that cell to move when I copy this down to the relative cell below? The answer is I do not want it to move, and therefore, yes, I do need to make an absolute reference. Selecting F4 on the keyboard, putting a $ before the B and 8. You only need a mixed reference, but an absolute reference will work. Then we'll do the payment here. The payments are all going to be $25,000. I'm going to make that a negative and $25,000 so that it'll show up as a negative number, allowing me to kind of use my sum function when we sum them up on the outer column here. So, and this one again is picking up something outside the table. When I copy it down, I don't want it to move down. Therefore, I need an absolute reference here too. So I'm going to select F4 on the keyboard, $ before the B and the 6. So there we have that. So now we want the 86,628 plus the increase for the gains that we're going to have as this is still in an investment minus the $25,000, which is the actual cost we're going to have to pay for the college on a yearly basis. So this is going to be equal to the one above it. And then I'm going to say plus and use the sum function. And then as I sum these up, it's going to be adding one, and subtracting the other due to the negative number. Closing it up, shift 0 to close it up. And hopefully we've done everything we need to do to now copy it down. So I'm going to select these 3 cells, put our cursor on the fill handle, drag it on down, and there we have it, and it's at 0 at the end of the day. So that kind of proves that our present value calculation is correct. We have 86,628. If everything goes well, we can spend the $25,000 each year and still have enough instead of having $100,000 due to the fact that whatever's still in the account is going to be generating that 6%. When you're doing a retirement type of calculation, you typically have a similar kind of thing in mind. You got a big chunk of money that you're trying to nibble at over time without having it go away and still earn interest so that you can live on the thing. So now let's do it in the calculation with the formulas over here. So we'll do the same calculation with the formulas. And this is more of a complex formula to do, so hopefully they don't make you do this too much in a classroom, but they probably will at least introduce it to you, so we'll do that. Putting our cursor on column C, dragging over to J, CJ, and then right-clicking, we're going to hide those cells. We're doing this calculation, so you could simply plug the information into this formula, which would be the payment, which would be the $25,000 times the 1 minus 1 over 1 plus R, which is 6%, to the number of periods, which is N, or 4, divided by R, which is 6% again. We're going to use this opportunity to make a complex table, given the fact that this is a complex formula with 2 kind of division components in it, and see if we can build basically a table on it. The table doesn't need to be perfect, but practicing putting something into a table format like this is good practice, and so that's what we'll use it for. This is the format you might see a tax return in, or the format you might see financial statements in. Just building the table can be useful. It's also something that you can use if you're basically having a similar calculation that you want someone else to use, and you want to make the data input screen, an easy data input screen or something like that. So we're going to say we have the payment up top, picking up the payment. I'm going to put that in the outer column using our strategy of having the two major components in the outer column. And then the inner column, I'm going to take the two major components here, numerator, denominator, in the inner column. And then this numerator, I'm going to have to break this thing out as well, given the fact that it's somewhat complex too. So this would be a fairly complex thing to put into a table. And if you look at tax returns, you have complex things in tables that are in a similar format like this, right? So this will be the 25,000. And then I'm going to call this just the numerator. And this is the whole numerator, this whole up part. And notice I have another numerator kind of subcategory here. I'm going to put a colon, bringing this to the inside. I'm going to put over here, starting with just this 1. I'm just going to put 1 here, because I got to have 1 minus this whole thing. And then I'm going to put another subcategory, which I'm going to call the numerator 2. So I'll call it numerator 2, which I know is a funny name. And then I'm going to say this is going to be 1, because now I'm in here in this subcategory calculation. I'm just going to put that on one line. I don't need a subcategory for it, because there's only one number in it. And then the denominator, which I'm going to call, I could say denominator, which is 1 plus r to the n, something like that. And so that's going to be the denominator. I'm going to put a colon for a subcategory on the denominator, which is going to be 1 plus the rate, which is going to be equal to the 6%. So now I'm in here, 1 plus the rate, 6%. I'm going to make that a percent, home tab, number group, percentify it, font group, underline it. Then we'll put the subtotal here. So subtotal, and sum that up equals the good old SUM, shift 9, up arrow, holding down shift, up again. Let's make that a percent by going to the home tab, font group, or number group, percentifying at the 106%. We'll take that to the number of periods, or n. So I'm going to take that to the periods, known as n, which is going to be 4 periods. 4 periods. Let's underline that. Home group, font, home tab, font group, underline. And let's call that another subtotal. Bring that to the outer column. So this is going to be in the outer column. This equals the 106%, shift 6, caret to the power of 4. Let's add some decimals so we see some activity there by going to the home tab, number group, decimalizing it, adding a bunch of decimals. And it could keep on going, but we'll keep it there. And let's actually call this should be we're going to call it the denominator here. So that's this whole thing is ending this kind of process. So I could indent these, selecting this whole thing, home tab, alignment, indent, and possibly indent this again, home tab, alignment, indent again. We're going to pull this to the outer column, home tab, font group, and underline. So now we've got this division problem we'll do here. We'll pull that in the outer column. So this is going to be equal to, notice we're only working in one column at a time. So I'm going to be in this column and then divided by this. This is standard kind of financial statement formatting oftentimes. We work in one column at a time. Then we're going to go to the home tab. We're going to go to the numbers, add some decimals, decimalizing that. So there we have that. So now we've got this whole piece done. And now we're in this outer column where we have 1 minus that whole piece, which will be the end of the numerator calculation, which indicated by this colon would think that we would put it into another column, but I'm going to keep this in the same column here. So this is going to be the whole numerator, which is going to be equal to the 1. We're working in one column again, minus this thing we just came to, that decimalized number. We need to add decimals there so we can see it. Home tab, number group, decimalizing it. Let's put an underline under this one where we go font group and underline. So there's the numerator. And then the denominator, which is the rate. So that's this denominator, the rate. We can put right underneath here, and that's going to be the 6%. So we're going to say 6% there, adding that to a percent, home tab, numbers, percentifying it, font group, underlining it. Then we'll call this a subtotal, putting that in the outer column, this whole thing divided by this. So now we'll have this whole thing done, which we can finally multiply times the payment, putting that in the outer column. This will equal the numerator divided by the denominator. Adding some decimals, home tab, numbers, decimalizing it, underlining it by going to the font group and underline. And finally, that'll give us our present value of the annuity. Working in the outer column now, we're going to multiply the 25,000, this thing times this whole thing that we just calculated, the 3.46 and so on. This equals then the 25,000 times that 3.46 and so on, gives us about the 86,628. Let's add a couple decimals, home tab number, couple decimals. Finally, there we have it. Okay, I tried to correct some spelling here, and I tried to do the indentations a little bit, make sure we got those lined up. But in essence, there we got it. We have that there. You could double check that on the answer key if you want to look at a little bit more detail. Okay, and that's in the green tab. Let's do this one more time with the tables. So I'm going to put my cursor on K here. And before we do, just note that this cell right there represents kind of how you build the tables. Notice it has more than 4 digits, which will result in the tables, which are limited to 4 digits, being somewhat off in terms of rounding, which will not be too bad for what our purposes are here for decision making, given the fact that it is an estimate. But in practice or in a test situation, they could use that, remember, to kind of distinguish what you used to calculate. Okay, let's hide some columns. Put in our cursor on column K, dragging over to column P, let go, right-click the selected area and hide those columns, and do it one more time with the tables. So we're going to have the payment, which is going to be equal to the 25,000. We're going to look for the tables now, 6% 4 years. 6% 4 years. So there's the 6%. 4 years is at the, and by the way, make sure you have the right table. We're looking at the present value of an annuity table here. Typically, you have 4 tables to pick from. Present value of an annuity. 6%, 4 years, 3.4651. So we got 3.4651. Adding some decimals, home tab, number group, decimals. And then we're going to say this is from the table. And this is going to be the present value of an annuity. We're going to say, multiplying this out, 25,000 times the 3.4651. Putting an underline, home tab, font group, and underline, we get the 86,628. Let's add a couple decimals, home tab, number group, couple decimals. There we've got the 86,627.50. Okay, let's unhide some cells and just recap here. Putting our cursor on column B, dragging to R, right-click, unhide. So we had the 25,000 that we want to take out each year, which if we didn't have any other earnings on it would be the 100,000. We calculated that if we have a 6% earnings in the beginning amount, we would need only the 86. We need 86,627.64, and then we proved that by basically starting that and having a running balance, which brings that down to 0, proving the annuity. Then we've got in this calculation we've got the 86,627.64 using our formula, and then we've got slightly different number using the tables of the 86,627.50 due to the difference of rounding, because this number is rounded to 4 digits. That's the number that came from the table, and if we look at the actual number that we calculated, or closer to the actual number, going more digits out, it's going to be different due to the rounding of the 4 digits.